So what is the housing market outlook for 2025 in the Waterloo region? Well, we're going to take a look today. Now, as a rule, I don't like to make predictions. I will never say I know this or that is going to happen because nobody has a crystal ball and nobody really knows what's going to happen. But I am a data guy. I like to look at the data. I like to evaluate patterns and make decisions or assumptions based on those types of things. So today we're going to take a look back at 3 years of statistical data in the Waterloo region, talk about some of the changes that's been happening in the real estate market, mortgage rules, and why this year might be a lot better than the years before. So let me start off by talking a bit about mortgage rules and buyers. So there are a lot of buyers that have been just waiting on the sidelines, and a lot of that has to do with affordability. That's kind of the issue that's plaguing everyone across Canada and across North America and parts of the world as well. Affordability is the biggest issue. So the government has been trying to make changes in order to allow more buyers to come into the market and to buy properties. So the mortgage rules have just been changed. They now allow for longer amortization periods. So amortization periods, that means you have a loan, you have that mortgage loan. How long do you have to pay it off? Before this year, you would have a max of 25 years to pay off your loan. If you're a first-time home buyer, or if you're purchasing a new build property, you can now stretch that to 30 years. And what that does is it can lower your monthly payments and make things a little more affordable for you. The other thing to consider is interest rates. So interest rates have been going down consistently for many months now, and they are expected to continue to drop, but there are a lot of unknowns now. What's happening in the political world with the federal government, with America, there's a whole bunch of things that can potentially mess with all of this. But the latest inflation data showed that it went down, and a lot of that had to do with the HST GST tax break over the holiday. But what's important to know is inflation did go down. The Bank of Canada is going to be looking at that. Many people are anticipating them to drop rates even more. Might be that a lot of other buyers are waiting for that as well. We shall see. It's still early days in January and February. Traditionally, things are slow and they start to pick up as we get into the end of February and into March. But we're going to look at the data. We're going to look at the patterns and the last 3 months of housing market data and talk a bit about what we can typically expect in the coming year and that sort of stuff. Sorry, I can tend to blab, but we're going to get to it. So here we are, 3 years of housing market data in the Waterloo region. And the first thing you'll probably notice is this giant mountain right here. The first point is January of 2021, and at that time the median price was $661,000, peaking in February of 2022 at $960,000. Nearly $1 million median price for any property type in the Waterloo region. Now, if we quickly look back 5 years, you can see that this was steadily appreciating. You can see these stats were going up and up and up for many, many years. It didn't just start in 2021. It had been happening for many years. And the reason was interest rates. We all got drunk on exceptionally low interest rates, so low that you couldn't really go any lower, nearly 1%. And what happens when interest rates are that low? It's so cheap to borrow, to get loans, to get mortgages, that everyone buys. And that's what was happening. The cost to borrow was so cheap that real estate valuations and sales were going up and up and up for many years. But of course, that wasn't sustainable. And in February 2022, that bubble burst. Things came down in December 2022. They pretty much reached their bottom, still more than they were in January of 2021. That's something a lot of buyers and sellers should probably be aware of. We're likely not going to get back to those interest rates again. The reason being, if it happens again, then sales and valuations will just go up. And affordability is still the major issue. I would not expect a lot of strong growth in the next few years because affordability is still an issue, and there are a lot of buyers that are still waiting to get into the market. Now, over the last 2 years, we've had more normal market patterns. And this is pretty much the typical market pattern for housing in the Waterloo region. Things are really slow in December, January. It's holiday season. People are buying presents or they're away on vacation. So housing activity goes down. It's the lowest point of any typical year. And then as we get into the spring market picks up. There's more buyers, there's more inventory. And what typically happens is there's a peak in the spring. In 2023, that was in May. And then as we get into the summer, people go on vacation, there's less activity, things slow down again. We typically get a little bump in the fall, and we can see there was just a little one in September and October of 2023. And then they go down again to their lowest period of the year in December. That was 2023. In 2024, pretty much the same thing happened. Another typical year. Things went up in the spring. They peaked in March. There was a bit dip. They went up again in May. After May, things slowed down again in the summer. And again, we got a little bump in September to October, that fall bump. And then things slowed down again as we got into December. So I am expecting this typical pattern to occur for the next year and maybe the next few years. Obviously, it's impossible to know what will happen. There's so much going on in the world right now and how that will affect the market. I am anticipating more buyers getting into the market this year with the new mortgage rules and interest rates expecting to go down. So we should see a good spring, and we're just not going to get back to that volatility. So I wouldn't expect a crazy volatile market anytime soon. Again, things are still expensive, and so I see valuations kind of remaining stagnant for the next little while, although I do expect a little appreciation each and every year, as typically happens. If we look at the max number of years, everything tends to go up. Going back to 2011, everything slowly moves up. Then we had this, but it's needed because nobody can afford the valuations that we have right now. Let's take a look at individual property types. So single family, it's the one property everyone's really hungry for. It's the most popular one. It followed the same pattern that we saw for all property types. New listings have been kind of up and down, and sales have been up and down as well. So I would expect to see sort of the same pattern. They go up, and then we kind of reach that ceiling. I would call it an affordability ceiling, where it's like, well, no one can really buy these properties at that price point, so things correct, and that's what we're getting. Typical appreciation and then a little correction, because we've just hit an affordability ceiling that most buyers can't match. And so a lot of properties out there, a lot of the inventory is just above and beyond the means of most people. And of course, a lot of sellers are not willing to take a huge loss. So a lot of those properties are sitting on the market, and a lot of those sellers are maybe just waiting for the market to catch up. The one interesting property type is condos. Condos have been up and down. They've been zigzagging up and down, month to month for the last 2 years. So this is the most recent year, 2024. And a lot of this has to do with inventory. There are a lot of condos available now. There's not as many investors. A lot of investors usually pick up a lot of that condo inventory, and they're just not there right now. That might change if interest rates keep lowering, so we'll see. But the cost of construction materials has gone up. And so for a lot of older condo buildings that have to go through these repairs, it's meant special assessments. It's meant higher condo fees. Condo fees on some of these properties are insane, up to $1,000 a month. So again, affordability is the issue. Condos are supposed to be the most affordable property type, and a lot of them just aren't affordable because the condo fees are high, the property taxes are high, surprisingly as well, and a lot of the sellers just aren't willing to part for their condo units at the appropriate price, at the prices that buyers are willing to snatch them up. So I think we'll see inventory slowly come down as more buyers enter the market. They'll pick up. A lot of it depends on what buildings, what complexes are selling this month or that month, and that's why we're kind of getting this zigzag. It's just a volatile property type, and but we'll see what happens. It's still the most affordable property type. If you're looking for a 2-bed, 2-bath, condos or townhouse condos are an affordable option. It depends on the building again. So if you are looking for a condo or you're looking for your first-time home buyer options, I would be more than happy to discuss your specific needs and your specific situation and discuss strategy and how to navigate the market for you. So I will leave my information in the description below. It's always there, and you can send me a text or email or schedule a Zoom call. I'd be happy to discuss your situation. So semi-detached, there's not a lot of semi-detached properties in the Waterloo region. Follows a bit of the same pattern, but there's not a lot of inventory. So anytime there's a few sales, it can create dramatic ups and downs. And then townhomes, again, a lot of townhomes are condos. Same deal, a lot of zigzags up and down, up and down. So the outlook is essentially look for similar patterns from the last 2 years. Look for things to pick up in the spring, probably happening as early as February. More buyers will enter the market, more listings, more inventory will enter the market. Things will pick up and they should peak around May or springtime. Typically, it will slow down in the summer. Maybe we get a bump in the fall and then things will drop in the wintertime. Of course, we'll see what happens with everything else happening in the world and how that will affect it. The government knows, everybody knows that affordability is an issue. And we're all trying to mitigate that, and we're all trying to make properties, find properties for as many people as possible. Inventory is the big issue, right? And the provincial governments and municipalities are trying to build more. I'll talk about new build communities and where you can expect those in another video. But for now, that's all I have to say for today. Again, my name is Daryl Lacroix. I'm your guide to life in Waterloo Region. And if you're making a move in 9 days or 90 days, doesn't matter. Shoot me a text, send me an email, or schedule a Zoom call, and I'll be happy to discuss your situation and your search with you and help you navigate the market. Until then, have a great day, great weekend, great month, great year, and I will see you in the next video. Cheers.